Hi, Larry Gaines, Power Cycle Trading. In this video, I want to show you a really amazing trading strategy. This is called what we call a pairs trade or a spread trade. So it's really kind of a market neutrality type of strategy where it doesn't really matter the direction of the market. So the market, the overall broad markets or whatever you're trading could be going up, down, sideways. It doesn't matter. So what this trade is doing is just trading the relationship between two particular stocks, or it could be a stock in an ETF, or it could be commodities or whatever, and something that has some type of correlation. So this is an example of Conoco Philips, a long setup where you'd be long Conoco Philips and short the ETF XLE, which is the energy ETF. Now this is a weekly chart, so you can see this line represents that spread or the pairs difference between these two, this stock and the XLE ETF. So you can see back here, way back here in October, November, this particular trend based on a technical indicators that we use are reversal indicator here. You can see a reversal there, pattern. And then we've got cycle 1 and 2. These are momentum indicators. They went positive, and you can see that this spread started to break out and trade to the upside. So if you look here, this number here, this was at that point in time when this started trading up, right in here, where we got the indicators to give us positive momentum on a weekly. This trade was at $25.39 per share. So that was Conoco Philips was trading at $25.39 per share below the ETF XLE, and now it's trading at just $1.72 per share below. So that's a huge move. If you take that move as a percentage or just as a dollar per share move, if you take 25.39 minus the 172, that's a $23.66 change in the spread. So that's an improvement for Conoco Philips. It's now gained $23.67 per share on that spread value. And if you did 100 shares long, 100 shares short, that would be a gain of $2,367. Or you can also do this type of strategy using what we call a synthetic option structure, where you go synthetically make a long and synthetically make a short using options. So it's a really great strategy, and it doesn't matter again which direction the market goes. So if you just take a look at the longer term charts for Conoco Philips and XLE, you'll see. So looking at here, this is about where that trade started to really take off. This was back in January 2016 right here. This is a weekly chart on Conoco, and you can see it's been a great trend up. It pulls back here, a great trend up, but it pulls back here. So it pulled back from 2017 all the way, had a pullback all the way into August 2017, and you can see at the same time you had XLE having that same pullback. But when you look at the spread, it doesn't really matter that the market was going down. The spread kept going up. So if you looked at those two charts, both Conoco Philips and XLE were going down, straight down, but look at the spread. The spread is going straight up. All right, so that's the beauty of a pairs trade, and this is what all the big hedge funds will trade. It's a huge, deep market, but a lot of the smaller traders just forget or don't know how to do this. So if you'd like to learn more about it, please join us, and you can get a free review of this on a recording that we just did at Power Cycle Trading. So go to our website, powercycletrading.com, click on upcoming live events, and this will tell you what's going on, what's coming up with the Power Cycle Trading events, and also any courses. So click on that, and you'll see, if you get in here quick enough, you can review or see this whole recording that we just did on this type of trading strategy. Hope this helps. Talk to you on my next video.